It's time now for a check of the top business news stories, and I'm joined by Kate Moody. Hello, Kate.
Hi, Tom.
Now, one of the big stories this summer has been TikTok. We have heard an awful lot about that Chinese video app. It sparked global tensions. Donald Trump doesn't like it. He wants it banned. And now the deal to sell the app could be in jeopardy.
Yeah, the Chinese government has announced these new restrictions on exporting artificial intelligence from Chinese companies. This just as TikTok prepares to announce a possible buyout deal. We had been expecting some sort of an announcement by Tuesday. Unless TikTok finds a buyer that's been approved by the Trump administration within the next 2 weeks, the app's U.S. operations will be shut down. Yana Lee has the story.
It's a move that could derail a multi-billion-dollar deal. China has revised its export restrictions list for the first time in 12 years, just as video app TikTok tries to find suitors to take over its operations in the US, Australia and New Zealand. Beijing insists it's a move to guarantee national economic security.
The main reasons behind releasing the catalogue are to regulate technology export management, facilitate technological development, cooperate with foreign countries, and to safeguard national economic security.
TikTok's China-based company ByteDance vows to adhere to the new regulations that effectively ban selling its artificial intelligence technology. But it's a spanner in the works for the social media app as the Trump administration's deadline edges closer. Washington demanded that TikTok's U.S. operations be sold or be banned by September 15th, citing security concerns surrounding the personal data it collects. Though a recent poll says 40% of Americans back Trump's executive order, the decision could upset the app's some 100 million U.S.-based users. TikTok entrepreneurs say a ban could have a ripple effect across several industries.
Maybe people shut down sales in store and they were going to do an e-commerce strategy that involved TikTok. It could affect a lot of industries, but yeah, especially the music industry, just because so many songs go viral from TikTok.
The app's reach had been enough to attract household names. Microsoft and Walmart have joined forces to bid against tech giant Oracle. But a product stripped of its key ingredients could drive their offers down or even scare them away.
The head of the World Trade Organization is formally stepping down today. Robert Azevedo announced his surprise resignation in May, ending his term a full year early. He's now taken a job at Pepsi. Well, 8 candidates are vying to replace him. Frontrunners include Kenya's Amina Mohamed, Nigeria's Ngozi Okonjo-Iweala, and the UK's Liam Fox. A decision isn't due until November. Whoever's chosen by the 164 member states faces an uphill battle to reform an organization in crisis. The WTO has become less relevant as global trade tensions and tit-for-tat tariffs have flared up, and the Court of Appeals at the WTO has been virtually crippled by Washington's refusal to approve new judges. Shares of the French utility group Suez soared more than 18% on Monday after an unsolicited bid from domestic rival Veolia. It's offered around €3 billion to buy the nearly 30% stake currently owned by energy giant Engie. The French government owns nearly a quarter of Suez and will have a say in whether that deal goes ahead. Suez's board has warned the deal could lead to great uncertainty in the industry. Previous efforts to merge their water and waste management units were blocked over antitrust concerns in 2012. Let's check in on the rest of the day's trading action now. London's FTSE 100 is closed for a bank holiday this Monday. The other major European indices closed lower. The CAC 40 down over 1% despite that movement in its utilities sector. European shares have seen overall gains for the month, though, as has Wall Street. We've got a mixed picture in New York this hour. The Dow Jones has dropped around 200 points, even as it heads for its best August since the 1980s. Both Apple and Tesla are trading higher on the first day of a stock split, and that's helped to boost trade on the Nasdaq. Well, the British hospitality industry is urging the government to extend a program which subsidized discounts in restaurants. The Eat Out to Help Out program was launched as part of a broader stimulus plan in order to encourage consumers to spend money post-lockdown. That is due to expire on September 1st, this Tuesday. Now, diners on certain days had been getting half off their check up to a certain amount. 84,000 outlets had signed up for the scheme, and 64 million meals were claimed in the month of August. Groups in the industry reported more diners than at the same time a year ago, but they say now they're worried about their future after those discounts are stopped. Very, very troubling times ahead, Tom, not just for the restaurant industry, of course, but economists increasingly warning of some bigger impact from the pandemic a little bit further down the road.
Indeed, but it seems that has been a real success, that Eat Out to Help Out programme there in the UK. Well, thank you very much indeed. Kate Moody from the Business News Desk. Thank you.